Good afternoon, everyone. On behalf of Nuvama Wealth and Investment Limited, I welcome you all to the earnings conference call of Allcargo Gati Limited. We are pleased to have with us management team represented by Mr. Pirojsha Sarkari, who is the MD and CEO of GESCPL, Mr. Anish Mathew, the CFO, and Mr. Sanjay Panjabi, Investor Relations for Allcargo Gati Limited. We will have opening remarks from the management now, followed by a Q&A session. Thank you, and over to you, sir.
Thank you, Amit. Good afternoon and a very warm welcome to everyone on our Quarter 3 and 9-month FY2024 earnings conference call. We have uploaded our results and earnings presentation on the stock exchanges and company's website, and I hope everyone had an opportunity to go through the same. As mentioned, along with me, I have Mr. Anish Mathew, the Chief Financial Officer of Allcargo Gati Limited, and our Investor Relations team. I will now share an overview of the economy, industry, and business, after which we'll hand over the call to Anish to discuss the financial performance of the company for the quarter and half-year ended December 2023. To start with, as per the composite scheme of arrangement announced, the international supply chain business of Allcargo Logistics will be demerged. Both GESCPL and ASCPL will be amalgamated into Allcargo Gati, following which Allcargo Gati will be merged into the resulting Allcargo Logistics, hence forming two listed entities, one called Allcargo EQ and the other Allcargo Logistics. We expect the scheme to be completed in the next 12 to 15 months. A bit on the economy. In the recent World Economic Report released by the IMF, global economy to continue to be resilient in 2024 after a better than expected 2023. Major economies faring well during the second half of 2023, coupled with falling inflation in many regions of the world, has reaffirmed the confidence of a better performance as compared to 2023. Global GDP is projected to grow at 3.1% in 2024 and 3.2% in 2025. This growth projection is low as compared to the historical average of 3.8% witnessed during the last couple of decades, barring, of course, the COVID years. Geopolitical tensions around the globe, like conflicts in the Middle East and Ukraine, will continue to impact trade and commerce. In the midst of a gloomy global economy, India has been the bright spot. The e-way bill volumes for December 2023 totaled 9.52 crore, and for November 2023, they were at 8.75 crore. These figures signify resilient domestic trade and transportation activity. Furthermore, GST collection in December 2023 reached rupees 1.65 lakh crore, marking a 10% year-on-year increase. IMF has projected India's GDP growth to remain steady at 6.5% for 2024 and 2025. The growth in India is expected to be driven by domestic consumption and government policies that support local manufacturing. From an update perspective, I would like to share we have appointed Mr. Uday Sharma as the Chief Commercial Officer at GESCPL. Uday brings over 2 decades of experience in business development, organizational turnaround, franchise development, as well as strategic planning. Before joining Allcargo Gati, he was working with Delivery, Spot On, and Safe Express. He was the COO of Spot On. Now I will share some highlights on the growth pillars of Express business. To start with, sales acceleration. The fruits of our sales acceleration initiatives can be witnessed through our volume growth. For the quarter ended December 2023, we have registered a 11% volume growth as compared to last year. Would like to share here that we have been clocking a monthly volume of approximately 100,000 tons consistently. We have undertaken initiatives such as customer service process engineering and customized offerings to maintain customer stickiness and convert lost customers. We have also redesigned the SME incentive policy and initiated digital onboarding for faster customer activation. The sales team has also undertaken yield management initiatives like minimum selling price for all new businesses and setting up digital wallet for SME customers. Infrastructure amplification, we are well on our way to complete the first phase of infrastructure. Out of the 8 hubs that we had planned under phase 1, 6 hubs are operational. These hubs have helped us in improving our service levels, which in turn has helped gain client confidence and incremental business. I would like to share with all of you that we have inaugurated the Indore hub recently. Operations excellence, we are bringing in cost effectiveness and efficiency performance by creating a network of there is special focus on data analytics for data-driven decision-making. On the technology front, we had initiated the rollout of dimensional weighing and scanning machines across 4 of our locations. These DWS machines help in reducing revenue loss due to inaccurate dimensions and weight capture. This will help improve billing transparency, revenue collection, and simplify the process. These machines have now been rolled out across 12 locations. And as mentioned earlier, GEMS 2.0 development is already in progress. With this, I would like to hand over the call to Mr. Anish Mathew, our CFO, for financial highlights for Quarter 3 and 9 months FY2024. Over to you, Anish.
Thank you, Phil. Good afternoon, everyone, and a very warm welcome to our Q3 and 9 months ended FY2024 earnings call. I'll take you through the highlights of financial results for the third quarter ended December 2023. Before I share the financial highlights, I would like to talk about key initiatives we have undertaken with a focus on improving overall performance. As communicated to you all in the Q2 2024 earnings call, we did significant cleanup of accounts receivable. The initiative was directed towards accomplishing the objective of improving the cash flow and drive adherence to the payment terms by customers. With the objective of sustaining this financial discipline, we enable customer code blocking for long overdue customers. While the initiatives helped improve the cash flow, reduction in DSO and ECL provision, we witnessed drop in the business from some high-yield customers who have been consistently defaulting on the payment terms. This had an impact on the volumes as well as the yield in Q3 2024. We are confident that with improved service levels and continuous customer engagement, these customers will eventually come back with volumes. Our ECL for 9 months ended FY24 is a reversal of 1.4 crores as compared to a provision of rupees 20 crores for 9 months FY23, which shows a net improvement of 21.5 crores. The second initiative is to increase the margin, and one of the components is to improve our yield by taking price hikes. The process was initiated mid of Q3 2024, and we expect this to be completed by Q4 FY24. Parallelly, we are working on mix of optimization, which includes higher share of business from key customers with high yields as MSME and retail customers, etc. The third initiative is pivoted towards cost optimization. I would like to highlight here that one of our major costs, which is the line haul cost, has declined by approximately 5% on a year-on-year basis. Our endeavor is to continue our focus on further reducing this cost and have lined up a couple of initiatives directed towards this objective. Apart from direct cost optimization, as mentioned above, we are also looking at optimizing the fixed cost. All the above initiatives would help us drive our performance in the coming quarters. On to the financials, I would like to start with the highlights of our express business first. The company has shown strong performance in terms of volume, driven by operational excellence and sales acceleration initiatives. The total tonnage handled for Q3 FY24 stood at 318,000 tons as compared to 287,000 tons handled in Q3 FY23, representing a growth of 11% year-on-year. Revenue from express business stood at rupees 371 crores in Q3 FY24 as compared to 379 crores in Q3 FY23. Corresponding gross margin stood at 21.7% for the quarter ended December 23 as compared to 27.8% in the same quarter last year. EBITDA for the express business stood at rupees 7 crores in Q3 2024 as compared to 21 crores in Q3 FY23. Client mix for the quarter ended December 2023 for KEA, SME and retail stood at 69%, 14% and 17% respectively. I'll now move to discuss the performance on a consolidated basis for Allcargo Gati. Revenue for the quarter ended December 2023 stood at rupees 424 crores as compared to 441 crores for the same period last year. The gross profit for Q3 FY24 stood at rupees 81 crores as compared to 107 crores for Q3 FY23. And the EBITDA for Q3 FY24 stood at rupees 7 crores as compared to 19 CR for Q3 FY24. On the sale of non-core assets, there has been a good progress. We've been able to sell 3 more properties in the current quarter, and the total non-core assets as on 31st December stands at 32 crores. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Agarwal from Nuvama Wealth and Investment Limited. Please go ahead.
Yeah. Thanks for the opportunity. My first question is, if you can just explain the exceptional item which is recorded in the P&L this time. What is GIPL exactly, and what is write back for? So you can just explain the thing in detail.
Yeah, so there are 3 exceptional items. The biggest one is a write back of 23.6 crore rupees, which is basically a liability which we have created in 2016 with respect to corporate guarantee given to IDFC on behalf of GI Hydro Private Limited. GI Hydro is a company managed by us 12 promoters. IDFC invoked the bank guarantee in 2017-18, and since they invoked, we made a provision way back in 17-18, for 23.6 crore rupees. Now that GI Hydro has kind of paid the money to the financial institutions, we have and IDFC have relinquished this corporate guarantee. We took a reversal of the provision. So that is the major item, which is forming part of the exceptional item, which is 23.6 crore rupees. The other one is 9.42 crore rupees, which is basically the gain on sale of non-core assets. We sold 3 properties, during the current quarter, which resulted in a net gain, which is to the tune of around 9.42 crore rupees. And there is a small gain actually on account of, one settlement which we have done for one property, which is giving us a benefit of around 50 lakh rupees. The 3 items cumulatively contributes to this, 33.52 crore rupees of exceptional item reported actually for this quarter.
So this amount, this GIPL, is it a subsidiary of Allcargo Gati now, or is it?
No.
Because sorry, carry on. Yeah.
No, so GI Hydro Power Private Limited is basically, not forming part of Allcargo Gati. This is basically managed by the Australian promoters, Mr. M.K. Agarwal.
So this amount did not go from Allcargo Gati's balance sheet. Am I correct on that?
Yes, right. Yeah. So that provision we were carrying in the books, and we have now got the paid out the GI Hydro have kind of paid out in their money. So hence there is no need for carrying this provision in the books of account. Hence we have reversed the provision because the entire loan has been repaid by GI Hydro Private Limited in Q3.
Sure, sir. So my second question refers to the hub expansion which you've got. You reached about 6 hubs out of 8 hubs. So my question is, firstly, when is this impact of the hub expansion going to reflect in the margins, if I may ask? I mean, when could we see probably reduction or rationalization of cost completely? Is it going to take some time, or is it going to happen in next year? So if you can just explain the impact of that and when will it happen?
So as mentioned by Anish in his speech also, we have seen continuous reduction in our direct operating cost as a result of not just the hub expansion but bringing in efficiencies. So that has already started happening. The network effect comes in when more hubs get built out / renovated. So it's a continuous process.
No, sir. That's all from my side. Thanks a lot.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Siddharth from Blue Star Investments. Please go ahead. Siddharth, the line for you has been unmuted. You may proceed with your question.
Hello. Good afternoon. Thank you for the opportunity. I have a couple of questions. Firstly, on the intra-zone deliveries, I understand there is a cost advantage, but that is at the cost of yield. How much of our total volumes this quarter were intra-zone? And this is to understand the impact on our margins. Hello. Hello.
Yeah. So that kind of detail we don't have out in the public domain, segmenting interzone, intrazone, etc.
Okay, sir. Sir, the second question is that on the digitalization front, what are some of the initiatives which will help us in improving our operations?
So the major initiative, of course, is the build-out of GEMS 2.0, which is now 3.5 months down the road with TechM, and that is a full-fledged system that will be ready in the next 12 months. Having said that, there are some other projects that we had taken which are now fructified. For example, the POD which gets uploaded in our system, the visibility of that POD was not very good in the earlier GEM system, which now through the efforts of a startup that we have kind of utilized, we have a much better POD visibility for the billing perspective and for our customers to view it. We also have other digitization that we have put in place in our control tower. So our control tower to be effective needed a lot more proactive digitization to happen. We have made improvements to our control tower, thus being able to make sure that the line haul works on time every time. So a few such digital initiatives have been put in place to optimize our costs. As you know, our front-end sales team have already implemented Salesforce.com, and that is the CRM that we use to interact with our customers. So these are some of the initiatives that we have put on the digitization.
Got it, sir. That helps. Thank you.
Thank you. To ask a question, ladies and gentlemen, you may please press star and 1. The next question is from the line of Viraj Shah from Shah Investments. Please go ahead.
Yeah, hi sir. Just wanted to know on the volume side, despite volumes increasing, we haven't seen any major increase in revenues. Can you throw some light on the yield? Also, are the volumes on the back of the price discount or the industry-wide realization has dropped? If you could throw some light over there.
So again, this quarter we have initiated cleaning up our receivables, and as with Anisha's speech also, we have initiated certain processes which have kind of either got the high-yielding, specifically MSME customers to stop trading with us since they were not paying up, or diverting their volumes outside of the Gati network. So when you see that our client mix has moved with 69% in the large and MSME 14 and the retail being 17, the main effect is not that the large have increased, but the effect is that the MSME have reduced. And that is where the high yield customers who were in the MSME have kind of two things that have happened. One is we ourselves have stopped their trading because of their outstandings, which we had to collect. And secondly, they themselves moved out from shipping with Gati. So that is the major impact that we've had on our yields. Having said that, we have initiated a project for price increase with our customers, and this quarter we will be finalizing that so that by March end we will have new rates with most of our customers, which will come into effect from 1st April of next year.
Okay, understood. Could you also share some light on the integration of contract logistics business with Gati, and what are the synergies over there? By when we can see these synergies playing out, if there are any?
So with regard to the merger, etc., we have put out the schemes which are in the public domain, and I'm sure you must have read those. With regard to the benefits of the two business, there are quite a few benefits of the two businesses. Number one being that Gati itself has 3,500 plus customers on its portfolio, and the contract logistics business being a small and newer business for the group can leverage cross-sale with these customers who would have warehousing requirements. The second benefit is from a warehousing perspective, the business is pretty sticky with the customers, whereas Gati Express business is pretty commoditized. So if you have a customer that is doing both warehousing and distribution with one company, then that entire business becomes sticky with the customer. And last but not the least, one can always optimize the overheads costs of both the organizations. So there are n number of benefits that can come in, including one technology right from warehousing to final POD. So there are many benefits that one could get if you're doing both these lines of businesses. Even the customers would like to give their end-to-end logistics to one particular service provider. That's the way I see it.
Understood. Thanks. That was from my side. All the best.
Thank you. Participants, you may press star and 1 if you wish to ask a question. The next question is from the line of Anshul Agrawal from MK. Please go ahead.
Hi, thank you for the opportunity. Sir, I wanted to get some sense around...
Sorry to interrupt, sir, but the volume on your line is very low. If you could please speak closer to the mic.
Sure, am I audible now?
This is much better, so please go ahead.
Great. So I wanted to get some sense on the competitive intensity in the B2B express market, sir. The reason why I'm asking this is generally H2 is a strong half year for B2B express market, and for Q3 we have seen Q-on-Q degrowth in volumes for our company. So I just wanted to get some sense around, is it an industry-wide phenomena or something else that we can read across? Hello, am I audible?
Mr. Firoz Sarkari, sir, your line is connected. If you could please...
Yes.
Yes, please go ahead, sir.
Shall I repeat my question or?
Yes, please.
Okay, great. So I wanted to get some sense around the competitive intensity in the B2B express market. The reason I pose this question is what we have generally observed is Q3 and Q4 are stronger quarters for B2B express market, but I believe our volumes have degrown quarter on quarter. So wanted to understand if this is an industry-wide phenomena or something in particular for us.
So it's a mix of both actually. If you see industry-wide also quarter on quarter, many of the companies have shown a degrown. But for us specifically, because we initiated in this quarter certain processes for making sure that large outstanding customers, we stop their trading by ourselves and make sure we first collect the money from them. That has also affected our top line growth in a sense, but definitely cleaned up our receivables.
Okay, and any specific reasons why the industry has degrown in this quarter?
So one of it, if you actually see for the month of September itself, there was a huge surge in volume. Pre-festive volume came in September far ahead of last year. That was one major reason that the next quarter had a lesser growth. But second is the sentiments itself, because of the geopolitical reasons outside of India, got the consumption down a bit.
Okay, and any feelers for Q4, sir?
So Q4 seems to remain the way Q3 has been, and we don't see any major change over there.
Okay, got it. Very helpful. Thank you for the opportunity.
Thank you. The next question is from the line of Krupashankar NJ from Avendus Spark. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. My first question was more on the underlying weakness, what you're seeing. I mean, is there any sector which are showing a bit of green shoot with respect to tonnage growth, or is it subdued across all sectors? And second question would be more relating to your path to scale from these levels. How are you looking at your strategy for the next couple of years, given that the market has become quite competitive and there are emergence of a lot of new players in the space who have become quite aggressive with respect to pricing. So what is the management strategy with respect to the scale-up plan? Thanks.
So as far as the growth strategy is concerned, as Gati, we have learned a lot dealing with the fastest growing segment, which is the SME, MSME segment. And we are pivoting our strategy over there in the sense that while we still believe that that is the segment that will give us both the growth and the yield, the way we have been dealing with that segment is going to change. Previously, we had a large sales team, feet on the street, and were giving normal credit to this segment. We're changing that strategy. We are pivoting to having a contactless sales for the MSME side of the business and changing the credit policy to make it more cash on delivery rather than giving credit to that segment. We strongly believe that while one cannot do without that segment and the growth will come from there, the way we deal with that segment has to change. And that's a big change that we are bringing in. And now with Uday coming in, who has actually run this segment in his previous avatars in delivery and spot on, brings in a lot of insight into how to deal with this segment. So that is one clear area of change that we are going to bring about in our growth strategy. So it's not growth from where, but growth how, which is going to change for us as we move forward. And we'll establish this entire contactless strategy in this quarter so that from April of next year, it is up and running.
Thanks, Phil. But, coming to the first question which I asked is that on the commodities, which there is some bit of traction. Any comments on that?
So you see, it's a very dynamic environment right now. Had you asked me just about 25 days back, I would have said automotive has really shown growth, but suddenly in the last couple of weeks, even the automotive segment, we are seeing a little lull over there for whatever reason. So I can't put my finger on which segment is showing really exceptional growth. I think it is like an overall lull before a storm.
Got it. So now, following up on your comments with respect to the earlier part where you were explaining about pivoting towards more of SMEs, we are incrementally seeing that there are a lot of competitors who are adopting this similar strategy. Don't you feel that it will become overcrowded to a large extent and there will be spoil for choices due to which, again, things may not be as lucrative as it is now? Because you've seen that happening in the past, right? In many segments and the express itself.
See, I think the SME, MSME segment in India is so large and so huge and so untapped by the organized players specifically that this opportunity is not for one or two players, it's for the entire industry to grab. Secondly, as I said even earlier in my call, is that there is a clear shift that is happening from the unorganized segment to the organized segment as far as logistics in general and express logistics in particular is happening with these MSME, SME vendors stroke producers who now are aspiring to sell their products through the e-commerce platforms all over India. So the opportunity is huge. The per customer size of business is very small, and therefore we as Gati have decided to change the how over there. But otherwise, the opportunity is extremely large. In fact, this is the segment that is going to propel even India to the next stage of its economic growth.
Is it fair to assume that the SME base, or some service level being similar across peers, would harp upon the pricing of each of these players as which will gradually lead to the choice of service provider? Is there a pecking order in which how a large corporate thinks vis-a-vis SME thinks with respect to choosing the service provider?
The choice that a large service provider has because of the sheer volume that they can give is very different than what an SME can really demand. So I think it's a very different ball game. SME wants to be shown that they are equally important, but they can give us a far better yield than what a large player can give, because they cannot demand the price because of volume the way a large player can do. Also, it is the serviceability part, as I said, of an SME has to be looked at slightly differently from a cost perspective, because while yield may be higher, the cost of servicing an SME definitely is also higher if you do it in the traditional way. And therefore, we are looking at how can we do it differently such that the cost of servicing an SME can get us the required gross margin that we need as an organization moving forward.
Got it. Thanks for answering my questions. All the best.
Thank you. Participants, you may press star and 1 if you wish to ask a question. The next question is from the line of Kevin Gandhi from CapGrow Capital Advisors. Please go ahead.
Hello. Thanks for taking my question. So basically, I have two questions, sir. How much of the credit loss provisions can we expect in the upcoming quarters? Or are we done with the credit loss provisions? That's the first question. And for the SME, if we move to the cash model, how much of the growth deceleration can we expect in the coming quarters? Thank you.
Anish, you want to answer the first one?
Yeah. ECL provision, we don't expect a significant reversal of provision of ECL provision. Whatever actions we have initiated that have resulted in a significant, I would say, reversal, in the 9 months ended 31st of December. There might be, some reversal, but that again actually would depend on, how much of the cash flow improvement actually did you do get, in the balance of the quarters, because this is a model based on the cash flow, right? So that might kind of, increase or improve, but it's not going to be that significant as you have seen in the first 9 months of the current financial year.
Okay.
So, as far as the second question is concerned, it is not going to be a pre-cash pickup, as you said, cash pickup. I said it is going to be a delivery-based payment, which means that the minute we deliver the consignment for an MSME, we invoice him and get payment from him. We are pretty confident. We have done a lot of work on this, and also, like I said, we've got a very senior resource who has worked this model before in his earlier avatars, and we believe that will not shortchange volume at all for us.
Okay, sir. Thank you. Those are the only two questions I had. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rushabh from RBSA Investment Managers. Please go ahead.
Yeah, hi sir. So just wanted to understand more on the gross margins front. Directionally, we are earlier targeting a band of 20 to 32%, which is an optimal, target for a good B2B express company. And currently, we are at 20 and 22%. I understand there are a lot of restructuring that has happened and a lot of efforts that have, undergone. So directionally, sir, how should we look at it in FY25? Can things get more worse from here, or directionally we can expect some improvement from FY24 onwards?
So definitely the way we see this is that starting quarter one of FY25, quarter by quarter, we have to see improvement in the gross margins because we are going to leverage volume and gross margin with the existing overhead costs to get our EBITDA margin. And with all these processes that we are setting up, that's the way we should look at how Gati will move from quarter one of next financial year.
So strategy-wise, like you mentioned, that we had to pivot strategy for MSME. So for each of our, say, strategy for retail, KE and MSME, do we think we have a right strategy in place now so that we can balance volume growth as well as gross margins?
Absolutely.
Okay. And so last question on the fundraise. I think last time there was during the announcement that we were looking for a fundraise. So is there an update on that, sir?
So I think whatever we have put out in the public domain remains.
Okay. So for shareholders, it would be right if maybe if we show some good improvement and margins and then we go for the fundraise. I'm not sure how I'm sure that's the way you must be thinking as well. Just wanted to get your sense here.
Like I said, whatever we have decided, we have already put up in the public domain. I have no individual sense on this.
Okay. Thank you, sir. All the best.
Thank you. Participants, you may press star and 1 to ask a question. We have the next question from the line of Rishit Shah from Nuvama Wealth and Investment. Please go ahead.
Yeah, thanks for the opportunity, sir. So just one question from my end. We said earlier on the call that we are asking for price hikes, which will maybe be implemented in this quarter and will be visible in the financials from the Q1 of FY25. So in that sense, what kind of price hikes have we asked for, and this may impact what percentage of customers? I don't know.
So we have clearly targeted all the customers for a price hike except for the large customers who come on board through an RFQ. Since those we cannot change anything. As far as our targeted price hike is concerned, we are looking at a 6% and we call it an inflationary price hike with the customers themselves. So that's what we are looking for.
Okay, so this will basically impact all our KEAs as well as SMEs. Not the extremely large ones that come through RFQ, but the other ones.
Yes, all the rest, including retail.
Including retail. That's great to hear, sir. Thank you so much.
Thank you. The next question is from the line of Ravi Shah from Opal Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So, can you share the utilization at the Mumbai hub and Bangalore hub, and also have they reached the optimal revenue potential, and by when can we expect the full potential being explored, like from these hubs specifically?
So generally when we build out hubs in the express logistics business, we build out looking at our capacity for the next 5 to 6 years. These hubs are never built with current capacity because, as you know, these are built to suit hubs and they cannot be changed every year because it takes more than a year, first of all, to even build out a hub. So as far as the capacity utilization is concerned, both these hubs have enough capacity which will take us to the next 5 years in Gati from a growth perspective. I think what is important is the turnaround time of the trucks, and I can tell you that in both cases the turnaround times of the trucks have improved by more than 40%.
Understood, sir. Thank you for the detailed answer. I also have another question. So, can you update us on the sale of the petrol pump share? What is the status currently? You can give a brief idea. Thanks.
Anish, can you please?
There is no update on the sale of petrol pump. It remains as it is. We are awaiting confirmation from oil marketing company. As and when it comes in, we will kind of set the process. The process would include taking the board approval and then kind of taking this approval from the shareholders. So we are still awaiting approval from OMCs.
Understood, sir. Thank you and all the best.
Thank you. The next question is from the line of Tirth Kosar from Swan Investments. Please go ahead.
Hello, sir. So in this budget, a new rule has been implemented by the central government that all the buyers have to pay back all their dues to MSME businesses by 31st March, and on all henceforth orders have to pay them within 45 days. So with this being implemented, do you think that all the businesses that you've stopped from MSMEs may come back? And what's your take on this?
I think these are two different things that you are talking about. What the rule is about payments to be made to MSME, not payments receivable from MSME.
Yes, payments made to MSME. So with this being implemented,
payments receivable from MSME.
So my take on this, with as they receive their payment, they may be, as per your requirements, maybe before what you are expecting. So do you think that so my take was that them receiving their payments within 45 days and improving their working capital cycle, they may be able to give you payments earlier. So is there any take on that?
I have not looked at it that way, so I can comment by what you are saying. It should be positive.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
So thank you everyone for attending this call.